Okay, good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments, and I'll continue the series of broadcasts here in the mornings, my time. I'm based in California, to give you a little bit of an idea of what I think of the markets, of the environment, and so forth. I'll keep today's the presentation here a little shorter. If you have questions, submit them at merkinvestments.com/streaming. Few things. Obviously, we've had a non-farm, initial jobless claims report this morning that blew out by big orders of magnitudes anything that history has seen before. The financial crisis seems like a blip. The economy literally hit a wall. Not telling you anything you don't know. To tell you something you may not be aware of, in the first Friday of the month, we always get the non-farm payroll report, which gives us the jobless claims numbers. And so that's a report where people are saying, oh my God, what's the unemployment rate? Well, what people may not be aware of, it's based on a survey, and that survey is conducted the previous month, the month that has the 12th of the month in it. And so as that report is going to be published in early April, it will not reflect the situation we're in this week. It is stale data, so to speak. And so obviously there will have been an increase, but almost certainly it is not going to be the shocking number that many people might be anticipating based on today's initial jobless claims. For that, we'll need to wait for the report in early May. So just give you a heads up on that one. Then clearly the Senate has passed this $2 trillion stimulus. House is expected to pass it, and at least for the time being, the markets are positive. I'm always reluctant to say the markets are positive because the markets do what they got to do, and then we try to fit a storyline to it. And it doesn't really matter so much what I think of the bill itself because I'm just an observer here, and just pointing out that throughout the globe, massive amounts of fiscal spending is being ramped up. Germany, I think it was yesterday, announced 750 billion euros, so a little bit more in US dollars. And keep in context that the German economy is about 1/5 of the economy of the US economy. Now, sometimes we got to look into these numbers a little bit. It is not all money that's quote unquote spent. Some of these numbers are loan guarantees, especially the German package has a lot using existing institutions and channels to provide funding and loans. Um, Loans are a way to effectively scale anything a government can do. The same as in the US. The Fed had announced that together with the Treasury, they set up some special purpose vehicle that they can then scale up to provide loans to businesses. Now, of course, as we see, none of that stops the massive layoffs. And so let's talk about a little bit about the tail end of this, of what happens and then how this may play out. The short of it is, if you are a weaker player, much of this help may well come too late. If you are somebody who was struggling and now you got this slump there, you're not going to hit your sales target, and that may be an understatement. And let's say you need funding, and based in Silicon Valley, there will be a group of companies that are in that category. Funding may well be shut if you're not hitting your targets. That said, there are companies, and I'm aware of some, that actually do receive the funding in this environment, but there will be the weaker ones will quite likely crumble. But then there are the bigger ones. One of the larger restaurant chains in the US announced yesterday they're not going to be paying the April rent. So let's think about what's going to happen here. Maybe nothing in the short term. Maybe there are going to be some notices back and forth. But it's not always as easy as the landlord just saying, hey, I'm not going to pay. You don't have to pay, because the landlords themselves, they have a fiduciary duty towards their own shareholders, or the debt might have been disseminated and held by thousands of people, and so it's not easy to one party to just say, hey, we'll change the terms of that loan arrangement. And so there might be a default, and then there's certain clauses that are triggered and so forth. In any case, somebody has to bear the losses. Now, the government is going to try to socialize a lot of that, but it's not that easy to just come in and change the contract terms. It's practically not possible because there will be lawsuits. But also it is very disruptive if you change the rules of the game. Now you can say there's an emergency, all that, but you always got to be very, very careful in how you go about these things. Also, sticking with the real estate part, a lot of these real estate investment companies, and not making a recommendation on REITs or anything, or any security for that matter, there is they have a lot of leverage, right? And so yesterday I mentioned WeWork in the briefing. Again, I'm not making a recommendation on them, but if you look at how the bonds are trading, they're not trading well. They're not trading well. And WeWork in particular, you have month-to-month lease agreements for many of the tenants. And their own obligations are longer term. So what happens if, and I'm saying if they do default, well, the landlords may kick them out, but it's not as if they could refill that space right away. It could be that there is some sort of compromise reached with various buildings, but there are going to be ripple effects. And what I'm getting at here, maybe to move here to some different stage, we all talk about, hey, we got to shock the economy, we have a stimulus now, and we got through it. Well, unfortunately, it doesn't work that way in real life because there will be ripple effects. Consumers are shell shocked. They will stop spending. And they're not going to resume spending tomorrow. And so odds are that they're going to be secondary failures along the chain. And part of that is, of course, what central banks are trying to preempt, and why there's such an amazing speed that happens in all of this, even though that speed isn't fast enough. Let's talk about the markets a little bit here. In Europe, it appears the European Central Bank stepped in on a large scale. The peripheral debt was soaring today, and so there are clearly things they're trying to do to kind of ease the tension on that end of the spectrum. Just on the political front, I was quoted by an article, and what happens sometimes, you get misquoted a little bit. I just said, hey, you can't open up the economy right away. It's going to be mathematically. That's not exactly what I told the journalist when we talked. What my view is that, yes, the focus has to be on opening up the economy, absolutely. But of course, you need to do it in a safe and prudent manner. And now, there are some people say you got to have a very coherent approach. Well, that's not going to happen. Not with the US, not globally. And that's just how our political system is structured and how the globe is structured. There is no global dictator that can impose a very uniform way. And so there need to be localized solutions to get things back up and running. Obviously, those include also testing for antibodies. Those include ways of conduct that if you have a flare-up again after you've eased some restrictions and so forth. The short of it, though, is that absolutely you need to, quote unquote, shelter in place to break the exponential growth. And then once you have done that, you need to gradually find a way to get the economy back up and running. And in my view, of course, you should spend the $1 trillion on figuring out just that. Figuring out, ramping up the medical system, ramping up the testing, ramping up the methods and ways people can go back to work. Doesn't mean we have to adopt the South Korean model or the Taiwanese model, but we can certainly learn from their experience. And a lot of that appears to be happening. And so when I hear this political talk, oh, we got to open up the economy tomorrow. Well, that's quote unquote aspirational. You got to, and having that discussion, having that mindset is very important, because it is impossible for humans to be locked up as we are for an extended period. The humans don't work that way. They need to interact, they need to be productive, and also the government can't pay everybody $1,000 checks. That's not going to cure the virus. Now, obviously, you need to ramp things up. Now, one other comment, Mario Draghi, the former head of the European Central Bank, wrote an editorial in the Financial Times. It's available without a paywall, where he compares this to wartime spending. And several people on social media kind of pushed back and saying those comparisons are inappropriate. I don't agree with many things that Draghi has done over the years. And I would agree that the spending is the same, but the comparison is absolutely appropriate. When in during wartime, governments do what it takes They ramp up spending. They build a military machine. If you look at my Twitter feed, there is actually, no, I put it into a reply to somebody else. That's not directly. I might put it, if you wanted, I'll put it in the request here, and I'll retweet it. But in any case, you can look up the wartime spending. You can look up the wartime spending, and during World War II, at some years, we've had over 20% of GDP based on defense spending. And I'm not suggesting we spend this much on defense. We should spend more on other things. But now, when the need arises and you got to spend it, people spend it. And so right now, you need to spend the money. Now, we can argue and quibble about the details, but I think we all agree this is going to be very expensive. And so what happens is you spend a great deal of money, and then you worry about how to finance it kind of later. Well, you finance it by going to the market and raising the debt. You may have your central bank help it. You monetize the debt, and in many ways, I believe that is what's happening precisely right now. And it's probably not going to be as much as was spent during the major wars, but spending gets ramped up quite drastically, and you do what it takes now. And so what are the implications of that? Well, the implication is, A, you get through whatever you need to get through. You get through the war, you get through the disease. Now, we'll figure this out. We'll come out on the tail end of that. The other part, of course, is, yes, somebody does need to pay for it. And when the government pays for it and pays it all, then those costs will be socialized. The one comparison I have drawn is to German unification. In the early 90s, East Germany, West Germany got together, and West Germany said, hey, we're going to accept the Deutschmark, the Eastmark, 1-to-1, and we'll pay the same salaries. Now, had the negative effect that folks weren't as productive, measured by Western economic activity standards, and so through that, they didn't get jobs and so forth because everybody was too expensive over there, but it was still very, very expensive. And if you look at the inflation data, and that I do have in my Twitter feed, inflation hopped up to 6%, briefly so only, in Germany. And this is obviously not massive hyperinflation or anything like that, but you need to pay for these things somehow, and you do it by the debasement of the currency. That's the cheapest, most effective way. Will it happen this time? I don't know, but I'd be very surprised if it doesn't. Everybody has been talking about we want inflation. Well, historically, if you've had a credit bust, you get out of it with wartime spending. Well, this isn't wartime spending, but the closest to it is virus spending. And so that's just something to keep in mind as we go through this. Let me just see here whether we have any questions here submitted online. This hasn't been too actively used, this particular way of communicating. So I'll figure out other ways of communicating. Do give me feedback as you highlight how you like this format. I've thought about maybe even doing a Zoom group meeting where everybody can chat. Not sure whether that's good. We historically, of course, do the webinar style where it's one way, but everybody's getting used to these sort of ways of interacting. And so maybe that's another way one could have a group discussion. Any case, I will leave it at that. Markets are happy today. Let me make a few more comments. Whether we are at reach the peak of the market or not, I would be cautious about whether we have reached the bottom and are moving on from here, simply because of the expected fallout that's going to happen further. By all means, this stimulus package is providing tailwinds and whatnot. And by all means, the market's bottom well before we've reached the kind of the peak of the crisis, before the fundamentals are the worst. But the ripple effects in the global economy, I don't think we've seen all of that yet. Now, then again, maybe I'm just a naysayer and so forth. So as I wrap up, let me give you this wonderful disclosure that I would like you to see. And feel free to reach out, give me feedback whether you like this format. And I hope I'll talk to you in some way on social media or otherwise pretty soon. Thanks then. Take care.